Today, we're diving into a super important topic, compounding assets. Now, you might be wondering, what exactly are compounding assets? Well, they're investments that grow exponentially over time because the earnings you make are reinvested to generate even more earnings. It's like a snowball rolling down a hill, getting bigger and bigger. Investing in these kinds of assets is one of the smartest ways to build wealth. Whether you're saving for retirement, a dream vacation, or just looking to grow your money, understanding how compounding works can be a game changer. In this video, we'll explore 15 of the best compounding assets you can invest in to create wealth. From stocks and real estate to cryptocurrencies and intellectual property, we've got you covered. By the end, you'll have a clear idea of how to make your money work harder for you. So, stick around, hit that like button, and let's get started on this journey to financial growth. Trust me, you don't want to miss this. Segment 1. Financial instruments. Number 1. Dividend stocks. These are shares of companies that pay you a portion of their profits regularly, known as dividends. Think of it as getting a thank you gift for being a shareholder. Big, well-known companies like Coca-Cola or Johnson & Johnson are famous for paying dividends. What makes dividend stocks great for compounding? Well, when you reinvest those dividends to buy more shares, you start earning even more dividends. Over time, this creates a powerful snowball effect. For example, if you own 100 shares and get $2 per share annually, that's $200. If you use that $200 to buy more shares, next year, you'll earn dividends on more shares. The key is to keep reinvesting those dividends to maximize growth. Number 2. Index funds and ETFs. These are collections of many stocks or bonds that you can buy as a single investment. They're like a pre-made basket of goodies. Index funds track a specific market index, like the S&P 500, which includes 500 of the biggest companies in the US. Why are they awesome for compounding? Because they offer diversification, which means your money is spread across many companies, reducing risk. Plus, many index funds and ETFs pay dividends, which you can reinvest. Over time, your investment grows as the value of the fund increases and you keep buying more units with the dividends earned. Number 3. Bonds. When you buy a bond, you're lending money to a company or government and they pay you interest for it. There are different types of bonds: government bonds, which are very safe, municipal bonds, which are tax-free in many cases, and corporate bonds, which usually offer higher interest rates. The magic of bonds lies in the interest payments. If you reinvest the interest you earn by buying more bonds, you can steadily grow your investment. For example, if you have a bond paying 5% interest annually, reinvesting that interest means you'll earn interest on a slightly larger amount each year, steadily growing your wealth. By reinvesting the income from these investments, you can build a larger and more powerful portfolio over time. Segment 2. Real estate and physical assets. Number 4. Rental properties. When you buy a house, apartment, or commercial building and rent it out, you earn rental income from tenants. This is a fantastic way to generate steady cash flow. Imagine owning a small apartment building where each unit brings in rent every month. That's regular income you can count on. The beauty of rental properties is that you can reinvest this rental income into maintaining and upgrading the property, or even buying more properties. Over time, as property values increase and you collect more rent, your wealth grows. Plus, if you pay off the mortgage on the property, even more of the rental income becomes pure profit. Number 5. Real estate investment trusts, REITs. These are companies that own, operate, or finance income-producing real estate. When you invest in a REIT, you're essentially buying a piece of a large portfolio of real estate assets. REITs are great because they pay dividends, just like dividend stocks. These dividends come from the rental income of the properties in the REIT's portfolio. You can reinvest these dividends to buy more shares of the REIT, which means more dividend income in the future. It's a simple and effective way to invest in real estate without having to manage properties yourself. Number 6. Precious metals. These have been valuable for thousands of years and are often considered a safe haven during economic uncertainty. When the stock market is shaky, people tend to invest in precious metals to protect their wealth. While gold and silver don't pay dividends or interest, their value can increase over time. You can invest in physical metals like coins and bars, or through financial products like ETFs that track metal prices. As the value of these metals goes up, so does your investment. It's a slower compounding effect compared to stocks, but it's a solid way to diversify and protect your wealth. Segment 3. Alternative investments. Number 7. Peer-to-peer lending. First up in alternative investments is peer-to-peer lending, or P2P lending. This is where you lend money directly to individuals or small businesses through online platforms like Lending Club or Prosper. In return, you earn interest on the loans. Here's why it's great for compounding. The interest you earn can be reinvested to fund more loans. For example, if you lend $1,000 at an interest rate of 10%, you earn $100 in interest. You can then use that $100 to lend to someone else and earn even more interest. Over time, this reinvestment can significantly grow your money. Number 8. Cryptocurrencies. These are digital currencies that use blockchain technology to secure transactions. Cryptocurrencies are known for their high potential returns, but also for their volatility. Investing in cryptocurrencies can be risky, but they offer significant compounding potential if you reinvest your gains. For example, if you invest in Bitcoin and its value doubles, you can reinvest your profits to buy more Bitcoin or other cryptocurrencies. This can lead to substantial growth, especially during bullish market cycles. However, it's important to do thorough research and be aware of the risks involved. Number 9. Collectibles. These are items like art, rare coins, vintage cars, and even comic books. Collectibles can increase in value over time, especially if they are rare or in high demand. Investing in collectibles can be a fun way to grow your wealth. For instance, if you buy a rare coin for $500 and its value increases to $1,000, you've doubled your investment. You can then reinvest the profits to buy more valuable items. The key to success with collectibles is having good knowledge of the market and choosing items that are likely to appreciate in value. Collectibles provide a unique way to invest in rare and valuable items that can appreciate significantly. These alternative investments can add diversity to your portfolio and offer unique opportunities for compounding growth. Segment 4. Business and entrepreneurship. Number 10. Starting a business. When you start your own business, you create a platform for potential unlimited growth. Whether it's a small online store, a local cafe, or a tech startup, owning a business allows you to reinvest the profits back into the company. Imagine you start a small online shop selling handmade crafts. As your business grows and makes profits, you can use those profits to buy more materials, expand your product line, or even hire more help. Each time you reinvest in your business, you're setting the stage for more growth, leading to more profits in the future. This cycle of reinvestment and growth can compound your wealth significantly over time. Number 11. Franchise ownership. Buying a franchise means you're buying the rights to operate a branch of an established business, like a fast food restaurant or a retail store. The advantage here is that you get to use a proven business model and brand name, reducing the risk compared to starting a business from scratch. Franchises are great for compounding because they often come with strong support systems, including marketing and training. Profits from your franchise can be reinvested to open additional locations, which means more income streams. For instance, if you own a successful fast food franchise, you can use the profits to open more outlets, multiplying your earnings and compounding your wealth. Number 12. Intellectual property. This includes patents, trademarks, and copyrights. For example, if you invent a new gadget, you can patent it and then license the patent to companies who want to produce it. Every time they sell a product using your patent, you earn a royalty. Intellectual property is powerful for compounding because it can generate continuous income without much ongoing effort. Let's say you write a popular book and copyright it. Each time a copy is sold, you earn royalties. You can then reinvest these royalties into marketing the book, writing more books, or investing in other IP, creating a steady stream of income that grows over time. These entrepreneurial avenues offer dynamic ways to compound your wealth and achieve financial freedom. Segment 5. Financial Products and Savings. Number 13. High-interest savings accounts. These accounts are offered by banks and credit unions and pay you a higher interest rate compared to regular savings accounts. They're a great way to grow your money with minimal risk. When you deposit money into a high-interest savings account, the bank pays you interest, usually compounded daily or monthly. For example, if you deposit $1,000 at an annual interest rate of 2%, you'll earn $20 in interest over a year. If you leave the interest in the account, it gets added to your balance and you earn interest on the new total. This process, called compounding interest, helps your savings grow faster. Number 14. Certificates of Deposit, CDs. CDs are savings products that offer a fixed interest rate for a specified term, such as 6 months, 1 year, or 5 years. The longer the term, the higher the interest rate typically is. With CDs, you deposit a fixed amount of money for a set period. In return, the bank pays you interest. For instance, if you put $1,000 into a 1-year CD with a 3% interest rate, you'll earn $30 at the end of the year. If you roll over the CD at the end of its term, the interest earned is added to the principal and you earn interest on the new amount. This compounding effect can significantly boost your savings over time. Number 15. Tax-advantaged retirement accounts. Finally, let's discuss tax-advantaged retirement accounts like 401(k), IRAs, and Roth IRAs. These accounts offer special tax benefits that can help your savings grow faster. For example, contributions to a traditional 401(k) or IRA are tax-deductible, meaning you don't pay taxes on the money until you withdraw it in retirement. Here's why they're great for compounding. Many employers offer matching contributions to your 401(k). If you contribute $100 per month and your employer matches it, that's an extra $100 added to your account every month. Plus, the investments within these accounts, like stocks and bonds, grow tax-free or tax-deferred. Over time, the combination of tax benefits, employer matches, and investment growth can significantly increase your retirement savings. These financial products provide stable and effective ways to compound your savings and build a secure financial future. Remember, the key to successful investing is to start early, reinvest your earnings, and diversify your portfolio. Whether you're a beginner or an experienced investor, these assets provide great opportunities to enhance your financial future. Thank you for joining us on this journey to financial growth. If you found this video helpful, please give it a thumbs up, share it with friends, and subscribe to our channel for more tips on building wealth. Leave a comment below with your favorite compounding asset or any questions you have. Stay tuned for more exciting content, and happy investing!